What if you had just $1,000 to invest in crypto in 2025? No second chances, no backup plan. How would you turn that small amount of money into something meaningful in one of the most unpredictable markets on earth? First of all, this is not one of those buy this altcoin before it explodes videos. I'm not here to shield coins or chase hype. I'm gonna walk you through exactly how I'd invest $1,000 today if I were starting from zero. This portfolio is based on logic, long-term trends, and real lessons from 6 years of wins, losses, and brutal bear markets. And if you stick around, I'll show you the one asset class in crypto that I think it could quietly outperform everything else in the next cycle, and almost no one's talking about it. And before anything, yeah, this is possible. In previous videos, I explained my story, and I told you how we started with literally 10 times less, with $100. First of all, as we stand in 2025, the crypto landscape has evolved significantly. With a new macro environment, clear regulations under initiatives like the US Executive Order on Digital Assets, and the potential start of a big bull run, it's an exciting time to be involved on crypto, and if you are not, you should definitely. But let's be clear, this guide is designed for normal people, not whales. You don't need millions to make a meaningful investment. 1,000 is more than enough if you have the right strategy. I told you, I started with $100 and I'm actually living from crypto. In this video, I'll walk you through a full portfolio strategy with $1,000, split into core assets, high potential bets, and one wildcard sector that's underrated and could offer significant returns in the next months. By the end, you'll have a clear game plan to maximize your investment in 2025. But before we dive into the specifics of the portfolio, I would like to establish some foundational ground rules. First of all, the cornerstone of any investment strategy is understanding your risk tolerance. In the context of cryptocurrency, this refers to how much volatility and potential loss you're willing and able to endure. Crypto markets are infamous for their wild price swings. Double-digit percentage changes in a single day aren't uncommon. This volatility is a double-edged sword. It offers the promise of significant gains, but also the very real possibility of steep losses, of getting out of money. And it matters so much. Your risk tolerance shapes every decision you make. If you're someone who can watch your portfolio drop 30% overnight without panicking, you might lean toward riskier assets. If that kind of dips keeps you up at night, you should choose a more conservative approach. Let's break it down with some examples. If you don't like risk, you might favor established cryptocurrencies like Bitcoin or Ethereum. These coins, while still volatile, have a proven track record, widespread adoption, and are seen as the blue chip assets of the crypto world. They offer relative stability in an otherwise chaotic market. The medium risk tolerance, you might opt for a balanced mix, some Bitcoin and Ethereum for stability, paired with promising altcoins like Solana, Hyperliquid, and these mid-tier projects that carry more risk but also the potential for higher returns, as the ecosystem is still growing as expected. You just have to keep a look on Solana in the last cycle. Was not the highest risk bet, but it gave a really good returns for those who invest early. So it's a good point for you. I'm this kind of guy. And then the high risk tolerance. You're the type who's comfortable betting on the unknown. And you might dive into speculative tokens, new blockchain projects, or niche sectors with unproven but exciting potential, fully aware that while the rewards could be massive, the losses could be just as dramatic. By honestly assessing your risk tolerance, you can tailor your portfolio to match your financial situation, avoiding knee-jerk reactions when the market inevitability tests your resolve. Crypto investment isn't a sprint, it's a marathon. A long-term vision is essential because the market's short-term volatility can be brutal. Prices can go down on a rumor or skyrocket on hype, only to settle into a new normal months or years later. History backs this up. Bitcoin, for example, crashed over an 80% in 2018. Then those who held through that bear market saw it climb to new all-time highs by 2021, same on 2022, and new all-time highs on 2024 and 25. Similarly, Ethereum weathered multiple downturns but rewarded patient investors with exponential growth as its ecosystem matured. Another key thing is that every dollar has a job. In a well-constructed portfolio, every dollar you invest serves a distinct purpose. This isn't about throwing money into random meme coins and hoping for the best. It's about intentional allocation to balance risk and reward. You want to become a profitable investor, right? So think of your portfolio as a team, where each asset plays a specific role. It minimizes guesswork and ensures your portfolio is diversified, with each segment working together to manage downside risk while keeping you in the game for significant upside. It's a disciplined way to avoid the trap of chasing every hot trend that pops up on Twitter. With these ground rules in place, knowing your risk tolerance, embracing a long-term vision, allocating with purpose, and keeping an eye on the wildcard, you're ready to approach this portfolio with a good strategic edge. Now, let's get to the portfolio breakdown. First, let's go with the core assets of the portfolio. As I told you, I'm a medium risk investor, so I would allocate the 40%, let's say $400, to Bitcoin and Ethereum. These are the blue chip cryptocurrencies and the foundation of any solid portfolio. Just take a look on those who haven't invested one single dollar on Bitcoin on the last bull market. They probably haven't seen any returns on the last few months because Bitcoin is the king asset of the cryptocurrencies game. Bitcoin is often referred as the digital gold, and for one good reason. It has proven its resilience as a store of value over the years, with finite supply and growing institutional adoption. According to some intelligent people, Bitcoin could trade between $80,000 and $151,000 in 2025, with a target of up to $185,000, driven by a lot of factors like Bitcoin ETF inflows and favorable policies under the Trump administration, like we have seen. Ethereum, on the other hand, is the backbone of the centralized application and smart contracts, with ongoing upgrades like Pectra in 2025, which improved the transaction efficiency so hard, and some wallets functionality. Ethereum continues to solidify its position as the leading smart contract platform. We have seen venture capitals like Banek predict Ethereum could trade above $6,000 this year. But let's be realistic, Ethereum hasn't seen the best year on its history, and there's a lot of people claiming that it's actually dead. But I'll tell you something, since Ethereum was born, tons of people spend their time claiming it was dead, while they saw it climbing from just a few dollars to more than 4K per each coin. So be careful underestimating Ethereum, because I think it's the most common mistake in each bull market into the new people and also the old ones. So splitting those $400 evenly between Ethereum and Bitcoin gives you exposure to both a store of value and a platform powering the future of DeFi. So I think those are the most important investments for your portfolio. It's gonna be the basis for everything. Okay, so now let's go with my favorite side of this video, the high potential altcoins. Next, I'd allocate $400 to altcoins with strong fundamentals. I can't recommend any asset because I'm not a financial advisor, but Solana and Hyperliquid are really good projects because they're real use cases and upcoming catalyst. First of all, Solana has been a standout performer, known for its low transaction cost, making it a go-to blockchain for DeFi and NFTs. Its ecosystem is thriving, with 81% of all DEX transactions coming from Solana. Price predictions for 2025 are really bullish, with some analysts suggesting that Solana could reach up to $380 by the end of this year, driven by also institutional interest in projects like Solana Mobile. I think it's one of the best projects to take a look for the next years. It survived the worst bear market scenario when it crashed from $200 to $20, and its main backer, Alameda Research and FTX, got in bankruptcy. Everything was supposed to be over for Solana. I thought it, but it came back like never before and did an all-time high recently. So, as I said with Ethereum, please don't underestimate Solana. I did and I regret. And then I go with my favorite one, Hyperliquid. Hyperliquid is an innovative decentralized exchange but built on its layer 1 blockchain. It offers perpetual futures, trading with zero gas fees, and a fully on-chain order book. It's actually gaining attraction in the decentralized derivatives market, and it's expected to keep growing on the 2025. And you have to know that Hyperliquid is actually the first perpetual DEX in the whole market in terms of volume. Volume means revenue, and revenue means price of the token going up, because you have to keep in mind that Hyperliquid is actually spending the 100% of the fees they are actually doing in repurchasing their own token. So if you make some calculations regarding that they are actually doing more or less like $2 million revenue per day, that's actually a lot. You have to know that they are buying Hype token 2 million every single day. So the thing is that they are buying a high percentage of their own token, and they are actually not doing anything with that money, and they are actually putting all this hype into staking. That means that the supply is actually going down every day, and this buy pressure is making the token hype skyrocketing on the last few months. As you might know, before creating this channel, I've been a really maxi Hyperliquid trader, and also I've been investing in this coin, so I'm really confident with that protocol. Maybe I should do a specific video on how Hyperliquid actually works and why I think it's the most important asset or the best thing to invest in 2025 in crypto. And I'm not doing an exaggeration. You have to keep in mind that exchange is the most profitable business on the crypto space, and you have to keep in mind that all this profit they are actually making, they are using it to buy its own token, which also allows you to trade with less fees. So this is a kind of a loop that makes that investment so obvious for me. Wrapping everything by investing those $200 in each, you balance your exposure to Solana's established ecosystem and Hyperliquid cutting-edge DeFi innovation. I think that would be the best way to invest $400 in altcoins. And finally, the wild card is allocating $200 to real-world assets tokenization projects. This side of crypto is still emerging, but it has immense potential. Real-world assets tokenization involves bringing traditional assets like real estates, bonds, and commodities into blockchain, enhancing liquidity and accessibility. A report from Ocean projects that this market could hit $50 billion in just 2025, driven by adoption from institutions like BlackRock and Goldman Sachs. These projects go from Shawty, a crypto asset pegged to the current price of gold, to Centrifuge, which pioneered the real-world assets tokenization and supports collateralization for stablecoins and lending markets. There are also a bunch of other projects like Maple, which offers institutional-grade credit, and a lot of different options. Investing in these projects gives you exposure to a sector that's set to bridge traditional finance and blockchain, yet remains underrated among the retail investors. But of course, all of them remain as startups, and you have to be careful. That's the reason why I'd pick just one of those, and I'd be careful on how much percentage of my portfolio they are. Here's a summary of the portfolio allocation: 40% to Bitcoin and Ethereum, 40% to Solana or Hyperliquid, choose one of them, and 20% to low-cap coins or future narratives like real-world assets. But before we wrap, let's talk about some common mistakes you should avoid. First of all, let's talk about emotional trading. Buying at market peaks due to FOMO or selling during dips in panic can derail your strategy. Stick to your plan, man, even when the market gets wild. For example, in 2021, I got caught up in the hype and bought a meme coin at its peak. Within weeks, it crashed, and I lost a significant portion of my investment. That taught me to prioritize research over emotion. Second mistake, every bull run brings hyped projects that promise the moon but often fail to deliver. Focus on projects with solid fundamentals, like those with active developer communities or real-world use cases. The third issue is the overexposure. Don't put all your eggs in one basket. Diversify across Bitcoin, Ethereum, altcoins, and a wildcard reduces your risk. For instance, overinvesting in a single altcoin could lead to heavy losses if it underperforms. And the fourth mistake, along with this one, is over-diversification. While diversification is key, spreading your $1,000 across too many assets can dilute your gains too much and make it hard to track developments. Stick to manageable numbers of investments, like the 5 we've outlined, to stay focused. Discipline and simplicity are your competitive advantage. By avoiding these pitfalls, you'll be better equipped to navigate this volatile crypto market. So the conclusion here is that with $1,000 you can build a robust portfolio that balances stability, growth and speculation by allocating $400 to Bitcoin and Ethereum, $400 to high potential altcoins like Solana and Hyperliquid, and $200 to the underrated sector of real world assets. You're setting yourself up for success in 2025. The key to successful investing in crypto is discipline, through research and a long-term perspective. Don't get swayed by short-term market movements. Focus on the bigger picture. The real-world asset sector in particular is underrated because many investors are focused on the mainstream cryptocurrencies. However, with major financial institutions entering the space, it's poised for explosive growth, offering early investors like you a chance to get ahead. Now that you know exactly how to invest $1,000 in 2025, you're ready for the next step. But here's the thing, picking coins is just the beginning. If you actually want to understand how crypto works, how to avoid rookie mistakes, and how to build real conviction so you don't panic every time the market dips, then I made something for you. I put together a full beginner-friendly guide that walks you through the core foundations of crypto, from how blockchain works to wallets, staking, and securing your investments long-term. It's not hype, it's a full crash course that gives you the knowledge you need to invest with confidence. Click on this video right here to start the full guide. Trust me, you don't want to build your portfolio without understanding what you're investing in, so see you there. Thank you so much for watching this video.